GrowthDefi is a one-of-a-kind opportunity that doesn't come around often. A decentralized financial ecosystem of smart contracts that automatically aggregates deposits into the top earning yield farming protocols. Grow and gTokens have incredible profit potential, a more efficient way to accumulate cryptocurrencies. In this video, we're going to go right into the mechanics, exactly how it all works, and why it is so unique. Many people have become millionaires overnight through strategic moves into the hottest upcoming projects in crypto before they became explosive. Today, we're going to explore one of the most groundbreaking projects ever devised to unlock the full power of the decentralized finance movement. Okay guys, I'm going to be breaking down the Grow ecosystem, all of the moving parts, all of the innovation behind this protocol, and how it can be massively profitable. Right now, if you're looking at the big picture, there's four basic aspects to this. All are designed to increase the overall value of this project. You're profiting at all four of these different angles. So the Grow tokens, locked LPs for liquidity pools, gTokens, as well as the farm. These are all designed to go up in value. Now I say farm, that's typically known as yield farming. That's where this is going to begin. It's first going to start on compound finance, which is one of the most established and profitable protocols for yield farming. It's then going to move to Aave, there's curve finance, there's YFI, there's many others that this can be implemented on top of. What's really interesting about this project is that this can be applied to any earnings platform that has a tokenized ecosystem. So this is really cool that you have a layer on top of this that is all designed to help the overall system grow in value over time. Now what's different about this is this doesn't have a dividend paying token. A lot of people may be used to that, where you get into a project, you invest, and then you get one of their tokens. This is what we've seen in the yield farming. They're printing a token, and typically that has a very high dump factor. So it's really a dump token. You see those really go down in value, and it's one of those things where you're not really sure if this is going to recover. You can also have the ability to protect yourself within this ecosystem because of the innovation that's behind it, which I will get into a little bit later. Okay, so I went ahead and I wrote up some of the major talking points in all of these different areas. The thing to keep in mind, this is a growing, evolving project. There's going to be future layers that are going to be built on top of this. These are some of the basic building blocks and the things that you need to know and understand. So I know it looks like a lot. I'm going to go through and I'm going to explain some of the different aspects and the most important things that you need to know about this right now. So Grow tokens, you can buy these two ways. So through Ethereum, through some of the decentralized exchanges. Right now it's listed on Mooniswap and Uniswap. It most likely will be on future DEXs. It's going to be, it's only been out about a month and it's already gone up about 5 or 6x in value. So the design is for this to go up 100x in value. I mean, this is going to be something that has massive potential once people understand how this works and how all of these different things interact with one another. But right now you can pick it up for about $22 or so. It started at $4, and the initial liquidity that was put on Mooniswap, 500 ETH on Mooniswap and 50 ETH on Uniswap, was put up by the PowerMine bankroll. And so the PowerMine ecosystem, as well as the DeFi projects, were previous projects that were built by the same people that are putting this project together. So they've already built two very successful projects on the IOST blockchain. And as a PMine token holder, you have the ability to swap your PMine at 1 PMine for 12.5 Grow. So they are tied in terms of price. They're tied together in that way. Now, if you're looking for the simplest, easiest way to pick up Grow, that's going to be to buy on Mooniswap or Uniswap. You need to have a fundamental understanding of MetaMask or Saturn. These are plugins for those that may be new to Ethereum. You also have the Trust Wallet. I've left a couple of links below for that that may be new. The IOST is the one that I feel is something that people may not quite have the same type of understanding. It interacts the same way as MetaMask and the Saturn wallets, but there's a couple of different intricacies with the gas and the RAM. So I've left a couple of 1-minute videos that explain that real succinctly so you can get started. But if you want to get a little bit of a deal on Grow, you're going to get anywhere between 3 to 5% discount if you're swapping P-Mine for Grow. And the other advantage with P-Mine is you have the ability to earn dividends while you're waiting for this project to launch, since it hasn't quite launched yet. And even when it does, it's going to go through a little bit of a bug bounty program. It's not necessarily advised to go all in when it first launches, because there's going to be some things that are going to be out there, some very lucrative incentives for developers to try to find different holes and bugs. I haven't been able to find anything just yet. These are very, very competent people that have been hired, very high level guys, PhD level guys, top level universities in computer science, and we have a really good team that is involved with this project, and they are putting together some really cool stuff. And one of the ways that they are securing the ecosystem is through these bug bounty programs. So if there is a potential flaw or something that were to come up here in the near future when this launches, you know, that might be a little bit of a risk that you might take. So one way that you can hold your value in a little bit more risk-averse approach is to simply buy P-Mine tokens, earn dividends on those P-Mine tokens in the form of IOST. You also are earning per tokens, which is a deflationary token project on IOST as well. So a couple of different strategies to get into Grow. Now, the thing to understand about Grow is that you don't need to purchase Grow to get involved with the gTokens. Those are a little bit separate in that sense. You theoretically could never purchase Grow tokens and just purchase the gTokens and get involved with Grow in that way, because gTokens, the way it works is you're going to be buying the underlying token of whatever project you're in, whether it's Compound, Aave, YFI, some of these different protocols that have been out there. Maybe a new one comes along with a very high APY, and you want to get involved with that. You could just simply buy the underlying token and then mint your gTokens that way. So there's a little bit of a different aspect. It would be advisable to get involved with the Grow project because Grow owns the locked LPs. There's a couple of different aspects to understand about how this works. Grow token holders are going to benefit from all of the activity in this ecosystem, based on fees, based on the interest rates on some of these different things. So a lot of different ways that Grow token holders are going to benefit from this. Now, you do have the ability, or will have the ability here in the near future, once the Grow DAO launches, the decentralized autonomous organization, much like we've seen on Ethereum. This is an ecosystem of smart contracts and computers around the world that are going to run this in a decentralized way. There's not going to be a central entity that's in charge of it in that sense. It's going to be owned by the Grow token holders, and you will have the ability to vote on different things that could be launched in the near future, maybe a different liquidity pool, what have you. So there is some governance in that way. And you also have the liquidity pool assets. So it's a liquidity pool asset in the locked LPs. They're paired 50% Grow to 50% gTokens, at least initially, and you will have the ability to swap tokens. If you have Grow, you'll have the ability to swap those tokens for gTokens using those locked LPs. Now, they say that they're locked. It's a locked liquidity pool in the sense that the liquidity that is locked in there comes from all of the fees that are generated from minting gTokens with those underlying tokens that we are getting from these farms. So there's a 1% fee. Half of that, 0.5%, is going to be burnt. So it's a deflationary aspect. So if you're in earlier, you're going to do better because there's going to be less and less tokens over time, and your tokens will be growing in value as more and more are burned. The other half is added to the liquidity pair. And so when this is added, it's broken up with half of that is purchasing Grow tokens. So it's adding buying pressure to the Grow token. And then the other half is the G token, which comes from this pair, and that is being added to the locked liquidity. Now, you do have the ability to be a liquidity provider if you would like, and you can benefit from all of the swap fees. So when anyone swaps Grow tokens for gTokens or vice versa, you will be earning those fees in that way. Now, the interest and the fees that are earned in this locked LP from the locked the liquidity that is from the gTokens, all of that is going to be the grow from that is going to be burned, and the interest of the underlying token from the gToken is also going to be burned. So it's a deflationary aspect from that standpoint, because you're burning Grow and you're burning gTokens based on the weekly fees, and that's also going to be governed by the DAO once that launches. So there's a lot of positives to this. Now it's going to start on Balancer, and that's the way that it's going to work. So Balancer is a protocol that we've seen in this ecosystem, in the DeFi ecosystem, that helps to balance out a lot of these different tokens. Whether you have projects that are going up in value, down in value, there's going to be some variance there. Now there's arbitrage opportunity with that as well, and that's what's going to increase volume overall in the ecosystem. So it's going to start on Balancer, and there's just different positives that are all going to help to grow the value of those locked LPs. So you're locking Grow tokens, you're locking gTokens, you're burning those gTokens, you have less in supply, and you're earning interest and fees based on that. So that's going to help to help the overall project. So the locked LPs are earning, the Grow is earning in a deflationary way. It's also earning from a couple of different aspects, as well as the gTokens. They're going to make your gTokens more valuable. And so that brings up some of the farms. Like, why would you want to get into all of this complicated mess if you could just simply get into, say, compound finance, and you can earn DAI that way? So with this example, I've used DAI. So DAI is a stable token. It's one of the biggest stable tokens on the compound ecosystem. It's currently at a total APY of 5.7%. And the way that's broken down is when you enter DAI into compound, you're getting C DAI. And that C DAI, you're earning 2.8 APY. So roughly about 3% a year. But you're also getting comp tokens on top of that. So you're getting a little bit of an incentive. You're getting their dividend paying token in a sense. And that adds to the overall APY, which is going to give you a total of 5.7%. However, if you enter into this ecosystem, there's a lot more potential to make that APY go up significantly in value. And the way that you would do that would be through minting GC DAI. So there's some of these different acronyms, and the way this works is you have G, which is going to be the Grow ecosystem, and then the other smaller lowercase letter is going to be the protocols. So with the C here, it's going to be compound. With the A, it's going to be Aave, and so on and so forth. So with YFI, it may be a Y. They may have a different one for different protocols. And so that is the token you would be holding in your wallet. You're just going to simply hold that token, and it's designed to go up in value. And it's designed to go significantly higher than 5.7% APY. Now there is hundreds of millions of dollars locked into these different yield farming protocols. Now, once people realize what this is and how you can benefit with a much stronger, more profitable APY by being involved in an aggregator type of system in this way, this is going to attract a lot of whales, a lot of people that come to understand how this is so much more innovative. There's no other project currently in crypto that does this in this way. Say you can earn 5.7% with compound, but you can earn 20% APY with GC DAI. That is going to attract a lot of attention and bring a lot of interest into this project naturally. So there's a lot of really cool aspects. Now there are two layers to the gTokens. The first layer is the stable tokens. These don't have a whole lot of variability, because the thing you do need to keep in mind is impermanent loss. When you have these different fluctuations in price with, say, Ethereum, you can suffer impermanent loss, but the longer that you are in the project, the more that is negligible as different price fluctuations happen. So the first layer is going to be these stable tokens, and then you have all of these other tokens that are built on these platforms that are going to be built on top of that. So there's it's going to further optimize the APY when you take some of these different cryptocurrencies that are in all these established yield farming projects, putting those on top of stable token projects that are also earning interest, on top of the project itself earning interest. It compounds interest on all of these different aspects. So this is an established project with people that have done things in some really interesting and innovative ways to build a lot of success. And there's no question that I feel this is going to be one that could have massive profit potential in this way, because of what people are going to realize, that you have a much higher APY by getting involved with this ecosystem. There's also a lot more flexibility and adaptability with this. Now, if you're, say you're wanting to get into the newest yield farming because it has a very high APY, and this is something that's voted on by the Grow token holders, that they want to involve this as the next thing because they feel it's going to add to the overall value of this. You could be in CDAI and GCDAI in the Grow ecosystem, and you can benefit by the overall ecosystem profiting from even a new project coming out and doing very, very well. We've seen this time and time again in power mining. With a new project coming out, P-Mine token holders, you will see the divs just massively explode. There's several examples of that, of a new project coming out. And you wouldn't even have to be an investor in that project. You're just holding the underlying token of that system. So Grow token holders will benefit, G token holders will benefit. The overall system is designed to profit in multiple different ways, in multiple different angles. So there's a lot of really cool aspects to this. On top of, this can be tokenized on any type of earnings platforms. It doesn't need to be just yield farming. So this has a lot of future potential, but these are the basic building blocks and things you need to know and understand. So that's a basic breakdown on how Grow works, and I just want to further emphasize some of these key points just so that you understand that this is going to be a very innovative project that has a lot of higher returns than you're going to see in traditional yield farming. You're already seeing a lot of institutional money that is flowing into these projects, and this is going to be very attractive for people when they see the interest rates that you will be able to achieve in this platform. It's a more efficient way to pool resources. So when you look at this, if you're trying to compound within some of these different projects, you're going to be paying a lot in gas fees. If you're earning the comp tokens in compound finance, for instance, you need to sell those, or there's some different things that you have to do. So those are going to be incurring other gas fees. They may be dependent on the market. A lot of this stuff happens automatically within this project, and it also further compounds because when you're pooling those resources, it's a much more efficient way to do that. So the entire project grows as a whole as this matures. So you have higher APYs than the traditional farms, and you also have the easy way to transfer between some of these projects. So if you say you're in a G token, a particular farm that's not performing as well as maybe a new one that's just come out, you can easily transfer your value by swapping out through the locked liquidity pools into that new project and earn a higher interest rate based on the value that you had previously in that farm. So there's a lot of fluid dynamics behind this, and the ability to transfer in and out without having to necessarily go from completely different platforms. This is built on top of existing protocols, and it further increases the profitability of those protocols because of the ways that G tokens are going to be able to profit, the locked liquidity pools are going to be earning, as well as the Grow token, which is the foundation of this ecosystem. There's going to be a lot of different things that could happen in the future projects that are built on top of Grow. So that's something to keep in mind. This is the foundational token, and it's going to be integrated into everything within the Grow ecosystem. If you're looking at the previous history with PowerMine, with the PMine token, it has appreciated substantially in price on top of being a dividend-paying token that you have very lucrative earnings just by simply holding it in your wallet. This is going to perform some different functions within this ecosystem in a decentralized way. So there's a lot of really cool aspects, and the locked liquidity pools will also further increase the APYs of the gTokens. This is the most innovative and unique aspect to this. It does take quite a bit to kind of wrap your head around some of the different aspects, and I'll be sure to cover that in future videos to further break it down and show you how some of these different things will interact. But you can certainly get involved in the Telegram, and Safe is one of the best guys to interact with, who can answer a lot of your questions. It's very high level when you start getting into it, so there's fundamental understanding that you should probably have by taking in some of these different parts and researching, reading the white paper, and I've also left a few other links to some videos that I've done on the Grow project. So this is a really cool one. I think it has massive potential to go up in value the more people understand the earning potential behind this. So I encourage you guys to learn more about it and to stay in the know, because this is launching very soon, and you will have the ability to participate in one of the most innovative, unique yield farming projects that has come around in some time. These types of opportunities don't come around all that often, and so this is one that you should definitely take a further look into. So curious to hear your guys' thoughts in the comment section below. Be sure to like and subscribe, and I'll catch you guys in the next video.